Imagine a world where every drop of oil you buy doesn't have to pass through the US dollar. For decades, the dollar was not just a currency, it was the global oil toll gate. But today, India, the world's third largest oil importer, is quietly building a new lane. It's called trading in rupees. This film is the inside story of how India is reshaping the oil trade in rupees, why it matters, how it actually works in banks, what changed in 2023 to 2025, and what de-dollarization really looks like on the ground. To understand the shift, we first need to see how the dollar became the language of oil. Since the 1970s, crude contracts and shipping, bank letters of credit, and price benchmarks moved in dollars. This system created efficiency, but also dependencies, exposure to US interest rate cycles, sanctions risk, and conversion costs for every nation that needed energy to grow. India's dependence grew with its economy. The question was never, should we buy oil, but how do we pay for it with the least risk and cost? That question accelerated after 2022, when discounts emerged on Russian crude and payment channels became geopolitically sensitive. India's answer: build credible, legal rupee pathways alongside traditional routes, so energy security isn't hostage to one currency. The foundation stone of India's rupee trade architecture is something technical but powerful: special rupee vostro accounts, or SRVAs. In simple words, an Indian bank opens a rupee account on behalf of a foreign bank. When an Indian refiner imports oil, it can pay in rupees, the foreign bank's SRVA gets credited, and the overseas supplier can use that rupee balance to pay for Indian goods or invest in India. The Reserve Bank of India formalized this mechanism in 2022 and published consumer-facing FAQs to explain how SRVAs reduce dependence on freely convertible currencies while staying within India's foreign exchange rules. Think of SRVAs as the pipes that let rupees flow cross-border for trade. But mechanisms only matter if real barrels flow through them. The big breakthrough came in 2023 with the UAE. During Prime Minister Narendra Modi's July 2023 visit, India and the UAE agreed to settle trade in local currencies, rupees and dirhams, and to link India's UPI with the UAE's instant payments platform. The goal was faster, cheaper, and more resilient cross-border payments. This wasn't just a ceremonial MOU, it was built to work for high-value goods, including energy. 1 month later, the proof arrived. In August 2023, Indian Oil Corporation made a landmark payment in rupees for 1 million barrels of UAE crude from ADNOC, the first crude settlement under the new local currency framework. It demonstrated that oil could be paid in rupees at scale when counterparties and banks align. For India, it meant lower conversion costs and a template others could follow. For the global system, it showed that dollar-only energy billing is no longer the only efficient path. Meanwhile, India's purchases of discounted Russian oil surged after 2022, transforming crude flows in Asia. This was economics first: affordable energy keeps inflation down and growth steady. But the payments were tricky. With sanctions limiting Western channels and Russia wary of piling up rupees it couldn't easily use, many trades routed through financial hubs using currencies like the UAE dirham. Indian media and trade trackers reported that a large share of Russian barrels into India were ultimately settled in dirhams, an example of multi-currency pragmatism, while the rupee system scales. The lesson was clear: de-dollarization is not a flip of a switch, it's a portfolio of currencies, with the rupee gaining share where partners can recycle it. New policy moves in 2025 show India tightening the screws to make rupee trade more attractive. In August 2025, the RBI allowed holders of SRVAs to invest their entire rupee surplus in Indian government securities, without the usual foreign portfolio investor registration. In plain English, if a foreign bank accumulates rupees from trade, it now has a safer, more liquid way to earn a return while it waits to spend those rupees on Indian goods. That makes accepting rupees for oil, or any commodity, a lot more appealing for India's partners. All of this sits within a broader, official roadmap. The RBI's Interdepartmental Group on Internationalizing the Rupee has laid out steps to expand INR's cross-border use, deeper government bond access, robust payment plumbing, and bilateral arrangements so counterparties can hold and deploy rupees with confidence. The idea is not to dethrone the dollar tomorrow, but to give Indian trade a sturdier, multi-currency foundation over time. Of course, energy trade is geopolitics by another name. In August 2025, the United States escalated pressure with steep tariffs on a broad range of Indian exports, explicitly citing India's continued purchases of Russian crude. The move landed just as India signaled it would keep buying Russian oil based on national interest and price considerations. Delhi's message has been consistent: India will not let energy security be politicized and will use the best terms available, whether that's rupees with friends like the UAE or other lawful channels where needed. For viewers, the key point is that this pressure doesn't reverse India's rupee strategy, it accelerates work on resilient, non-dollar options so future shocks bite less. Now, let's zoom into the refinery gate and the bank back office to see how a rupee oil deal actually comes together. First, the Indian buyer and overseas seller agree to invoice in rupees or a rupee-dirham mix, depending on the local currency settlement available. The overseas seller's bank maintains an SRVA with an Indian bank. When the Indian refiner pays the invoice, rupees flow into that SRVA. The seller can then use those rupees to buy Indian goods, pay Indian service providers, or, under the 2025 rules, park the surplus in Indian government bonds until it's needed. The more India exports to that partner, the easier it is for the seller to spend rupees, the better the investment options, the happier the seller is to hold rupees in the meantime. That is why India keeps pushing to boost exports to Russia and other energy partners. It's not just about selling more, it's about closing the loop so rupee trade scales. The UAE case shows how policy plus infrastructure unlock real trades. Linking UPI to the UAE's instant payments platform reduces friction for small payments, but the wider LCS framework, central bank cooperation, and banking sector readiness are what make big-ticket oil invoices possible. It's like upgrading both the highway and the trucks at the same time. The August 2023 IOC ADNOC transaction wasn't a one-off headline, it was a systems test, proving that if partners can recycle rupees or invest them easily, the dollar need not be the automatic middleman in energy deals. Has India fully de-dollarized oil? No. India's policy is deliberately pragmatic. Where the partner prefers dollars, or where sanctions compliance and market liquidity dictate, Indian refiners will still use dollar routes or other widely accepted currencies. Where local currency pathways exist and make sense, like with the UAE, India will push in that direction and scale it up. De-dollarization is less about ideology and more about optionality, building multiple rails so no single currency shock can derail India's growth. A quick reality check on the Russia leg, because that's where most of the headlines live. Russian crude rose from a negligible share of India's imports before 2022 to a massive slice by 2024 to 2025, thanks to discounts that kept India's fuel prices more stable than they might otherwise have been. While commentators debate the politics, the economics are straightforward: discounted barrels lower India's import bill. Payments, as we've said, have often used dirhams, but Indian officials have also kept the door open to rupee solutions when Russia can deploy those rupees meaningfully, by buying Indian goods or investing in Indian securities under updated RBI norms. That's the purpose of those 2025 SRVA changes, to make rupee acceptance commercially rational, not charitable. On the diplomatic front, India's line is consistent: energy decisions are sovereign, and New Delhi won't allow external politics to undermine domestic stability. Regular MEA briefings have underlined this principle: India will buy where it gets the best terms while complying with its legal commitments. In parallel, India is working with partners to reduce trade imbalances, especially with Russia, by pushing Indian exports in pharmaceuticals, agriculture, and services, which again helps the rupee loop close. What about the market hubs? India has been building its own financial plumbing at Gift City, supervised by IFSCA, to host international-grade markets, from bullion on IIBX to IFSC banking units. While oil trading is still largely benchmarked out of global hubs, strengthening onshore market infrastructure is part of the same long game. If you want more trade in rupees, you need deeper rupee markets, better hedging tools, and credible clearing at home. These building blocks matter for any future where oil and other commodities can be priced, hedged, and settled closer to India. So, does rupee oil trade equal de-dollarization? The honest answer: it's a measured, Indian version of it. De-Dollarization isn't about ending the dollar, it's about reducing single-point vulnerability. India's strategy combines local currency settlements with friendly partners, regulatory tweaks that make holding rupees attractive, and continuous upgrades to payment and market infrastructure. In practice, it produces a multi-currency energy map, dollars where needed, rupees where possible, and sometimes dirhams or other currencies as bridges. Over time, as more partners can spend or invest rupees easily, the rupee share should rise. Where does this go next? Expect 3 visible trends. First, more local currency settlements with strategic partners, especially where two-way trade is strong and central banks cooperate on payments. The UAE model is the showcase. Second, more export push to rupee surplus countries so they can spend what they earn. Watch for sectoral deals in pharma, food processing, machinery, and services. Third, deeper rupee capital markets and clearer rules so foreign banks holding rupees feel safe, liquid, and welcome. Each of these makes the next rupee-denominated oil cargo easier than the last. And finally, the big picture. On August 27, 2025, Washington's tariff escalation revived the debate over how currency power shapes trade and energy. For India, the answer is not confrontation, it is construction. Build more pathways, more partners, and more policy tools so that when the world wobbles, your economy doesn't. Rupee oil trades are one such pathway. They won't replace the dollar overnight. But they already show that for a confident, fast-growing India, energy security can come with more choice, more control, and fewer toll gates. That is how India is reshaping the oil trade in rupees, and that is what modern, practical de-dollarization looks like.